In this video, we are going to discuss three things: staff entertainment, client entertainment, and motor running expense. So we will deep dive into these three categories of expenses and see how these impact VAT and corporation tax. So number one, staff entertainment. As an employer, you have some reporting and national insurance obligations for staff entertainment. What you must pay and report depend on four things. Number one, if it is an annual event. Number two, if it's open for all of your employees. Number three, what is the cost? Is it less than £150 per employees, or is more than £150 per employee? And number four is how many events have you provided to your staff during the year. You don't have to report P11D and pay national insurance if it's open for all employees. Number two, be an annual such as summer social or Christmas events. And number three is cost 150 or less than £150 per employee. So multiple events costing 150 per employee in total are also exempt for reporting P11D and paying national insurance. So let's have a look on examples. Example one, if employer or company has organized a Christmas party and it's open for all employees, the event cost is £100. Its cost is less than £150. So employer or company does not have to pay any national insurance contribution, or it does not have to report any P11D on that event. And after a few days, directors hold an event for themselves. This function is not open to all employees, even though its cost in total is £45 per director, but it's not open for all employees, so it's not exempt. So company has to report P11D and pay national insurance contribution, and then this £45 will be added into director's personal tax return as a benefit in kind. Example 2, a company holds 2 annual dinners open for all employees. The total cost for first event is £100 per employee, and the total cost for the second event is £70 per employee. So total cost for both events is £170. So both events are not qualified for exemption, since cost of both events on its own was not more than £150. Either event will qualify for exemption. However, it's more beneficial to exempt £100 and report £70 on P11D. In case of multiple events, employer does not have to maintain record of per head cost. However, for each function, cost per head should be calculated. Here, one important thing should be considered. The 150 is not an allowance to set against an amount that exceeds the figure. If the average cost of each of the event exceeds 150 per head, the full amount of benefit of either of the function should be chargeable. The general meaning of annual in this context is something that happens once in a year on a recurring basis, and it follows from the previous event. For example, a party to celebrate 35th birthday of directors should not be considered as a company event or staff party. So in terms of tax implications on staff entertainment, you can claim VAT as well as staff entertainment is an allowable expense for corporation tax. Number two is client entertainment. As per HMRC guidance, there are two types of client entertainment. Number one is business entertainment, discussing a particular business project or forming or maintaining a business relationship. Sometimes people call it as a business development meetings. Example, let's say you are on a business meeting and you and your client choose to go to some Irish pub. You and your client both order alcohol. Even though it's a business event, but as per HMRC guidance, you can't claim VAT on alcohol, and it is also not allowable for corporation tax purposes. Example 2, so you are on a business development meeting and choose to go somewhere on Turkish restaurant. You and your client both order a complete meal deal, which includes appetizer, main course, and drink. And for drinks, your client order alcohol. So for now, this is not just an alcohol, it's a complete meal deal. So for the tax purposes, HMRC HMRC guideline is if you are ordering some meal deal or complete meal deal which includes alcohol, so for that you can claim VAT as well as you can claim corporation tax. The general rule for client entertainment is you can't claim VAT as well as you can't claim corporation tax. Number 3, motor running expense. Related to motor running expense, you can claim either of mileage or motor running expense. Let's say company has a motor vehicle, so all the expenses related to motor vehicle including insurance, repair and maintenance, any MOTs, road taxes, you can claim it. And in case of company does not have a vehicle, so for that purpose you can, as a director or a sole trader of the company or business, you can use your private motor car for the business purpose. And for all the business journeys you can claim mileage, and for the first 10,000 business miles you can claim 45p, and for the remaining or more than 10,000 miles you can claim 25p. As an employer, if you are providing a parking spaces to your staff which are near to your employees' workplaces or which are provided on the business journeys, so you can also claim all of the parking spaces provided to your employees for the workstations or on the business journeys. Business journey includes part of your employees' duties and a journey that your employee must make to go to temporary workplace. So in terms of tax implications, for all expenses related to motor vehicle, you can claim VAT as well as you can claim corporation tax, or these are allowable for corporation tax purposes. However, on mileage you cannot claim any VAT, but it is allowable expense for corporation tax purposes. So in this video we have covered 3 main points. One is client entertainment, second one is staff entertainment, and third one is motor running expense. If you guys want me to record video or any other specific topic, please let me know below in the comment. As always, hands ahead, salute until the next video.